Hi everyone, welcome back to the channel today. So in today's video, as you have seen in the title description, we're going to be looking at mortgage financing. So we're going to be looking at this in the layman's language, basically looking at what exactly does a mortgage mean? What exactly does someone mean when they say the bank is going to finance for my property? So a mortgage is basically a loan that someone gets with the intention of investing in property. So you could, maybe you want to buy an apartment, or you want to buy a bungalow, or you want to buy villas, or you want to construct, something of a sort. Then you can be able to get a mortgage from the bank. In Uganda, we have quite a number of banks that are giving out mortgages. For example, we have Housing Finance, we have DFCU, we have Bank of Africa, we have Centenary Bank. Quite a number of these banks are all giving out mortgages. And my best advice is that we should all be able to go to these banks, ask for a bank relationship manager that can give you advice, that can tell you all about the mortgages, how it works, how it can be given to you, how much you're fit for. They will calculate for you according to your money that you earn, and then they can be able to let you know how much the bank can be able to give you. So many people have had bad experiences with mortgages, because maybe along the way you have lost your job, or you have lost your source of income, and then you end up losing your money, because maybe you have already been paying for the mortgage, and then along the way you can't go on, so the bank will definitely take what you have been investing in, and yet you have already lost money. But I believe this is all because people didn't get the best advice from someone, from the bank relationship manager maybe. So more reason we should go to these banks, so that make sure you get advice from the best relationship manager that can be able to calculate for you and tell you the truth, that this is how it's going to work, this is how much we can give you, and then you can be able to go into it knowing how you're going to work upon it, and how it's going to be able to work for you. And then most of these banks are giving them the mortgages that they give. Usually they give between 5 to 20 years. So you can go for as long as 20 years. But my best advice would be to pay for it at least in the shortest time possible, so that you don't pay for a very big interest here. Because obviously, since the mortgage saved you at the time when you needed to buy the property, but you didn't have the money. So in turn, because the bank lent you the money, you have to pay it back. So, and the way how you're going to pay it back is by paying interest. So different banks have different interest rates. So depending on the bank that you're going to use, then you would have to pay interest according to their interest rate. So my best advice would be, if they're giving you up to 20 years, it would be best if you pay for it in the shortest time possible. Like, let's say if you pay for it in 5 years or 10 years or 15, if you must be going long, or if you have actually planned out how you're going to do it, you could go for as long as even the 20 years. So basically that is it about mortgages. And one thing about them is that they make owning property really manageable and affordable. That's what I think. Because affordable in a way that you don't really change your way of living so much. Because how the banks really do it is that, let's say if someone is earning a minimum of Uganda shillings 5 million, and so you want to get a mortgage. Let's say you want to buy an apartment of maybe 100 million, let's say something like that. So what the bank is going to do is that it's going to take off 2.5. It takes half of what you're earning, and then it leaves you with half of what you're earning, so that you may continue living your normal way of living. And then the other half is going to be cut off every month, so that it can be able to go onto the property, which is good, because I think you continue living your normal way of living. You don't really change your lifestyle so much as such. You can continue living normally, and then still you're owning property, you're still adding value to yourself. And then another thing that I really like about it is that with a mortgage, let's say if you're buying, let's say, an apartment, a ready apartment, and then so the money that you would have been paying to a landlord, let's say, to stay in the rental apartment, this time you're putting the money on yourself. So you're basically adding value on yourself. Because instead it's like paying rent on your own property, which I think is a good thing, because you're adding value to yourself without even noticing it. You don't have to finance for your property with only your earnings. You can also be able to finance for your property using a mortgage. Mortgages actually make it really simple, they make it easier for you easier for you to manage. And it's also another way, it saves you from the burden of the whole stress of, oh my god, I have to pay a lot of money to the owners, because usually the property owners give you a really short period of time, so a mortgage saves you by giving you a longer period of time. So yeah, that is it from me about mortgage financing. I hope this video was helpful, and I hope we were able to learn something from it. In case you have any more questions, I'm going to leave my email right there down there, so that you can be able to email me, maybe ask me a question about maybe a bank that you would like to know more mortgage details about it, and then we can see the way forward, yeah, about how I can help or etc. Thank you so much for watching. Have a blessed day, and until next time, don't forget to subscribe to the channel. Bye.